Hello friends, welcome you all. I am Sundar from Canary Capital Solutions. Happy to connect with you again through this video. What a great time we are witnessing this history of Sensex claiming 50,000. And during this period, all investors should be very happy and enjoying this moment. But on the contrary, what I see is many of them are in a state of panic. So in this video, we are going to try and understand what you should be doing. Should you continue stay invested, or should you book profit, or you should completely exit? So that's what we are going to see in this video. So first, let's understand what is this Sensex all about. Sensex is nothing but a portfolio of about 30 companies. These 30 companies are the largest companies in India and the most traded in the Indian stock markets. These 30 companies are well diversified across different sectors which actually represent the Indian economy. And many of us think Sensex means it remains static, meaning the portfolio remains static. It is actually not. Many companies do enter and many companies do exit based on their performance in terms of how they run their business and how the stock price moves and the volume it gets traded. So let me explain this, comparing Sensex with the Indian cricket team. So your Indian cricket team and Sensex is constant, but the players inside keeps changing. For example, Kapil Dev used to be in the 1980s, then came Asruddin, then came Ganguly, then came Dhoni, and now it is Kohli. So the players keep changing, but the Indian cricket team stays constant. So I'm going to show you a chart where the holdings of Sensex at different points of time. So in the year 1986 to 2020, I have taken 5 different points in which what are the holdings in Sensex. So I'm not going to go in detail, but there are different companies which were within the Sensex. So if I compare, only 7 companies continue to stay all through the course from 1986 to 2020. And those companies are your ITC, your HUL, your Hero MotoCorp, Mahindra and Mahindra, and things like that. So these companies have continuously grown from size to size and they have found a place in Sensex all through these years. On the contrary, many companies have got dropped in between based upon their performance. In fact, some companies have vanished. In the 1980s, your Hindustan Motors used to be one of the darlings of Indian stock market. Today that company is no more. Likewise, there are many companies which have come in and went out, but Sensex have continued to grow from strength to strength. This is because Sensex has this unique thing of continuously filtering out the bad ones and continuously looking at a portfolio of the good companies of India. So the next chart what I am showing, you would have all seen this chart many times. Let me try and explain this. The Sensex based at 1979 was at 100 and today it has crossed 50,000. And during this last 30-35 years or close to 40 years, the market have seen various events, right from many governments falling to global financial crisis to scams, etc., etc. In spite of all this, there are pockets where markets have fallen more than 30-35% and again it has come. But an investor who had just stayed through the course have created 500 times of his money. So your 100 rupee Sensex today is at about 51,000 and odd. So that is the kind of journey Sensex has seen. So as investors, what we need to really understand is market going up and falling is a very normal thing. Many of us are not prepared for the downside. That's where we actually panic. Market never goes up in one direction or never falls in one direction, because even if there is a fall, the companies which don't do well exit the Sensex and companies which are doing well get into the Sensex and eventually Sensex starts growing. So what we need to keep in mind is market being volatile is very normal and it is not abnormal. So there are different types of panic which we go through. One is called the selling panic, the other is called the buying panic, and the other is called the holding panic. We are in a stage where we are in a holding panic kind of a situation where people who have invested money are in a sort of panic, not knowing should I continue to hold or should I exit. This panic is again not new to the market. Every time Sensex has reached a peak, this panic comes into every investor, but the people who understood that this is very normal and continue to hold on to their investments have made money and created wealth. And the other most important lesson what we all should learn is it is not the ultimate idea of investing is not to capture the highest point, sell it and buy at the lowest point. I think that is definitely not possible, and that we all should understand and agree. The point here is if you stay through the course, you will definitely create wealth. So just stay through the course. So let me try and explain to you this phenomena through how Sensex has journeyed in the previous past. So in the year 2000, Sensex was at about 5,000 points. Till 2003, the Sensex actually kept on falling and it came to a 3,000 point, which means a 40% kind of a correction. So the people who have stayed in the market for 4 years were actually losing money. And the moment Sensex came back to 5,000 in the next year, 2004, people were trying to exit because at least they got the money what they've invested, and many of them actually could not hold on to their investment. They panicked and they pulled out money. And see what happened in the next 4 years. So from 2004, 5,500 Sensex, by 2028, the Sensex went up to as high as 21,000 points. So that's what people who could not manage to hold on to their investment lost in terms of creating wealth. And the people who could not enter at 6,000, 7,000 point would have definitely missed the entire journey. Gaining a peak of 21,000 in 2008, the global financial crisis impacted the market. So from 21,000 it fell to as low as 8,000 points, and to recover it back, it was 2014 when market from 21,000 point in 2008 came back to the same 21,000 point in 2014. The same feeling happened to many investors because they have been holding on to their investment for the last 4-5 years. And the moment they saw that 21,000 point, they wanted to sell and exit to protect their capital. And after that, we all know what happened. From 21,000 point, market went up to as high as 40,000 point. So again in 2020, from 40,000 point, market fell to 25,000 point because of the coronavirus. And people who panicked and could not hold on to their investments, the moment it came back to close to 40,000 points, they exited, and today we all know where we are. And today we don't know whether it will end at 51,000, will it go to 65,000, nobody knows that. But the point I'm trying to make is, this panic is not new to market, this is time and again come. People who are seasoned investors, who have seen these ups and downs and who understand that market going up and falling is very normal, have always made money. And again, please remember, don't try to time the market at the peak or try to buy it at the bottom. If you have done it, it is just a coincidence. So investing is more like a test match cricket. The longer you stay in the crease, the better the chances of you winning. Just to prove that point, I'm going to show you a chart, a 1 month chart of Sensex. Look at how volatile Sensex has been. Within 1 month, market from about 50,000 points fell to as low as 45,000 points, and again has come to about 50,000 points. So this is the kind of volatility Sensex has gone through within a month's time. The next chart what I am showing is the most important chart in this video. We will have to develop a habit of looking Sensex in a block of 5 years. If you do that, this is how your chart will look like. Look at how smooth the journey has been. Right from 1981 till 2021, almost every 5-year block, except for one, almost every 5-year block, the Sensex has actually grown from size to size. So if you actually open up your mind and start looking equity investing as at least a 10-year kind of time frame, then the chances of you actually creating wealth is very, very high. The next chart is again a very interesting chart. It has got so much of data, very crowded slide. But the point here is, if you have stayed invested over a 15-year period at any given point of time, the probability of you making money is 100%. So equity investing is not a short-term investment, it is actually a long-term investment, and it has to be treated like a asset. If you cannot hold on to an investment for more than 10-15 years, then ideally you should have a combination of debt and equity together so that your volatility can be lesser and it can be used for your short term needs. Just to summarize, 50,000 is just a number. As far as Indian businesses continue to do well, Sensex will continue to scale new highs, and this is going to be reality. How fast, how much, nobody knows. But as far as we believe in the India growth story, I think Sensex has got many more legs. Investing is like a test match. Longer you stay, the better it is. Ups and downs are very normal when it comes to equity investing. Look equity market with a minimum 5-year window. The Indian equity markets have been creating wealth for the last 40 years and it will continue to do so. People who believe in it, please hang on to it. The journey is going to be bumpy, but for sure it will reach its destination. Stay invested and create wealth. So the next topic what we are going to see is the psyche of humans and money. A very interesting topic. We will try and understand what psychology and your behavior makes in terms of your investing decisions. Hope you enjoyed this video and the data what I showed you. Please subscribe to our YouTube channel Canary Capital Solutions and don't forget to press the bell notification. Thank you for watching.